Do you know why your heart beats fast whenever you have a trade running? It's because you've not yet mastered your entry strategy. Your entry strategy is not strong enough. That is why you are panicking whenever you have a trade running. And that is the reason why you are hopeful when your trade is in drawdown and you are fearful when you are in profit. Most traders close their trade too soon whenever they are in profit, but when they are in drawdown, they are hoping that the trade will reverse. One of my best strategy that I use in taking trade is demand and supply. Whenever I take a trade with this strategy, I'm always at peace. I don't care if my trade is in drawdown because I've mastered this entry strategy well enough that has made my winning rate 80%. So in this video, I'm going to be walking you through my advanced demand and supply strategy that has never failed. Currently, I just closed a trade on GJ with over 200 pips in profit. If you're watching me for the first time, my name is Godwin. You're welcome to my channel. Here is where we simplify trading, and my mission is to make sure that you become profitable with my strategy in no time. And if I already subscribed, you're welcome back. So let's dive right into the video. All right, before we go into the chart, let me give you an illustration of how demand and supply works, right? Demand and supply is quite related to support and resistance, but there's a little tweak to demand and supply strategy. And this is what I use definitely to make money always in the market. Now, what I have here is a what demand and supply what illustration. How do you regard a zone as a demand zone or supply zone? A demand zone is where buy position occur, and a supply zone is where sell position occur. All right. Not all support zone are demand zone, and not all resistance zone are supply zone. There are things you need to watch out for. Now, one of the things that I watch out for is what I call institutional candle. Now, whenever you see price get to a supply zone and you see a large candle, either bullish engulfing candle or a very strong weak rejection, that area is regarded to as what institutional what area. That is where orders are being locked in for what institutional buyers to come in. All right, and whenever price come back to that zone, what happens? There's always a rejection to the upside. All right, what do you want to do? You want to watch out any zone that you see large candle occur. I'll be showing you on the chart. All right, that is how to spot demand zone. And on supply zone is quite opposite of demand zone. You can see we have higher high, higher low, right? And the moment price gets to this zone, what happens? There's a long institution candle. All right, it could be bearish engulfing candle or a very strong weak rejection to the downside. In that way, you will know that sellers are residing in this region. So that region is called the supply zone. And whenever price in nearest future come back to touch that zone, such reaction may occur again. Why? Because that zone has not been broken, right? Sellers are still in this zone. So this zone is regarded as what? Institution zone, which is seller zone, which is supply zone rather. So you want to watch out for the type of candlesticks that tends to move price either upward or downward. All right, like I said, candlestick and what institutional candlesticks, right? So this is how I've been able to refine the strategy to my own best advantage. What I do is that whenever price is coming back to this zone, right, I don't only wait for price to touch it, I wait for extra confirmation, right? One of the extra confirmation I wait to see is candlestick formation. All right, now like I just said, either you see a weak rejection or tweezers. All right, there are tweezer candle you want to watch out for. Now, what are examples of tweezer candle? Let me show you on Google. Now, these are tweezer candle. What are tweezers? Tweezers are candlesticks that are responsible for, reversal candlesticks. They are reversal candlesticks. So you can see what we have here. We have tweezer. You can see this short candle here. They are tweezers. Whenever you find them on a support or on a resistance, they are definitely likely to reverse that market trend. Now you can see what we have here. The price market has been falling down, coming down. All right, this is the downtrend, but because of this tweezer here, it became an uptrend. Did you see that? So tweezer candlestick, whether tweezer top or tweezer bottom, are responsible for changing the direction of a trend. You can see they move market from a downtrend to an uptrend, right? To identify these candlesticks is not only by colors, right? The moment you find them on a support and resistance, they are always a candle of the same height, you can see, or likely slight difference. Did you see that? In height, they are of either the same height or a little bit slight different. All right, whenever you find them on a support zone or in a resistance zone, that means a reversal is likely to occur. Now, what did that happen here? If you find them here, what is going to happen? If I find a tweezer bottom here, that means I'm ready to go in for a what? A buy. That's a trigger for my what? Entry. That is another confluence that I use in taking what? Any trade, as long as demand and supply is concerned. Why? Because there are times that demand may fail. You may have several levels of demand. You may not know which one that may hold, right? So this particular strategy will help you identify the one you should go in for it. I will show you the particular trade, which is GJ, that I just made over 200 pips on, and that gave me over 1:3. Now, let's continue. If you find it here as well, if you find a tweezer top here, and apart from tweezers, you also want to watch out for either bearish engulfing candle or bullish engulfing candle, or morning stars or evening stars. These are candlesticks that can help you take proper setup whenever your trade gets to that demand zone or supply zone. All right, so let's move on. Let me show you the chart I'm currently in. I don't want to make the video too long. Now look at the GJ chart I just talked about. This is the trade that I just made over 1:3. You can see 1:3.8. Our trade just hit our TP. Did you see that? Now, how did I take this trade? If you look at it, right, we've had several levels of what? Demand. Right, like I said, anywhere, look at the supplies, look at the demand zone. This is an institutional candle. This is what? An institutional candle, right? Another demand zone is this. How do you know the demand zone? You can see the way buyers came in. These are long candles. The moment you see candles like this form, that zone is regarded as demand zone. Whenever price come back to this zone, there is likelihood that you have a reaction to the upside. That's how you trade demand zone. Whenever price come back to this zone, there's a likelihood that you have a reaction to the other side. You do see that? And this particular strategy works in all instruments. I also use it taking trade on NAS 100. That trade is still currently running right now. And I've been in that trade over I think I entered yesterday evening, almost a day plus now. Now, you can see we have several levels of demand here. You have long candles, all right? Candles forming here. So there are several levels of demand here. All right. Even here, let's take this one for instance. You can see when I spotted all this level, then I discovered that price have been bouncing off of this resistance zone. So, but it has not been able to break this demand zone. What happened is there, the moment price got here, we had a double bottom, and price never came back to this zone. Rather, it still formed double bottom here, right? So when I saw this particular price action here, I saw the way the candlesticks formed here. Do you see this candlestick? We have a very large candlestick. So that is why I regarded here too as my demand zone, right? Despite the fact that we have several demand zones, so there are several demand levels here that price can get to and react. But this is the first time price is coming back to this particular zone it left off. You can see the moment we had the pushed up to the other side, to the upside, price formed a double top here. So it came down here. I started seeing weak rejection. Did you see? I started seeing rejection. Now, after this weak rejection, what did you see? These two candles. These are tweezer candles. That are tweezer bottom candle. Did you see? These are tweezers. And that is the example. These are the candlestick example that I just showed you on Google right now. You can see. You can leverage on this type of candle. When I saw this type of candlesticks, then I knew that buyers are ready to come on. I already knew buyers are ready to come in. The moment I saw these tweezer candlesticks, then my other confirmation again, boom, was this other candle. As I said, weak rejection. It's on the 4-hour candlesticks. And that was how I was able to take this trade. I came to the 1-hour time frame, boom. Then what did I see? Impulse and correction. Did you see that? I saw a little bit of impulse and correction. That was how I was able to take this buy trade here. Just risking 59 pips, then to take over 200 pips. Did you see that? So whenever you wait patiently and you know what you are actually doing in the market, you have nothing to panic about. Let me show you another trade that I'm currently in on NAS 100. Good. Look at NAS 100. Now, look at NAS 100, all right? Now, when I came on yesterday morning on this NAS 100, price was currently here. Price was currently on this resistance, right? So my plan was I want price to get back to this what? To this zone. I wanted price to get back to this zone before I take a buy setup, and that occur around New York session. Do you understand? So when I saw price got here, I was able to take my buy positions, right? Why am I waiting for price to get here? Because these are institution candles. These are institutions. You can see this candle here. If I take it to the left side, you can see these are levels where buyers came in, right? These are demand zones. These are demand zone. Another demand zone you can also spot is this level here. All right. So there are two levels I was looking at for to take a buy entry. I couldn't have taken this buy here, right? Because this is a what? This is not a demand zone. All right. This is a supply zone. So I couldn't have taken this buy. Even if you are in an uptrend, you need to wait for price to come back to that level where you need to take a trade. Like I said, I explained my entry strategy in one of the videos I dropped last week. All right, how I enter a trade, my 5 criteria that I wait for to enter a trade. One of them is POI, which is point of interest. So my point of interest is this level here. I want the price to get back to this point of interest so I can take a trade. When price got there, what happened? There was a little bit of drawdown, but I was not panicked. You can see price was coming, almost trying to take us out. For some people, they would have panicked and closed their trading loss, but I said no. I was very confident about my entry. Even if price take me, I won't be sad because I waited for my entry criteria to play out, and I actually did, and I entered the trade. So if price take you out, that trade is not a loser. It's still a winner because you waited for your criteria to enter. That is how you become profitable trader. You can't be a profitable trader when you are panicking. Whenever you are in drawdown, you are panicking, and whenever you are in profit, you are scared. You are scared. You close your trade too soon. All right. I held this trade for over almost 12 hours now, and right now we are out of drawdown. The market is currently small profit, and this is my overall take profit. This is how you take trade using demand and supply strategy. So even here, you will see that we have a very institutional long candle here. So whenever price gets here, I expect sales to occur. That is how you mark your supply and demand zone. This is a supply zone because of this candle. The only time this particular zone will be violated is when you have a breakout of this candle. Is when you have a breakout of this region and price retested it. All right, then that means that zone is violated. So even though you have a breakout and price still come inside back the zone, that means this particular zone is still valid. Here is just a fake out. Here could just be a fake out. So these are the things you want to learn. All right, and I teach this more in my inner circle. That is why you get much of this juicy information about how you can make money in forex trading using just demand and supply strategy. I have a lot of strategy. I thought about even using trendline strategy in one of my past videos. So you want to go see that video after you watch this particular video, right? The link will be in the description below. And also join us in our free Telegram channel, all right? Or you can see the community is fast-growing community. I drop most of my gems there. People are joining here, all right? Right now we have about 29 members. It's a fast-growing community. You want to be part of us? Let's grow together, all right? And this community, I'll be dropping free signals as well. So you want to be part of those who are here making money for themselves, all right? All right, so that's basically the simplest way to make money in forex trading using just demand and supply strategy. And also, if you want to learn my 90% trading line strategy, I released the video about that. Also, you can click these particular links here or here to watch that video. So I see you in my next video. Thank you for watching to this particular time.